Well, yeah, look, I mean, I just think it's interesting. I mean, one of the things I like about what we do in our discipline is it's not narrative driven, it's not news driven, it's not confusing, it's just charts. And that seems, ridiculously simple and maybe overly simple, but it actually is really, really effective because it's the collective wisdom of the market. Kind of when you think about it, there's a certain kind of purity to it in essence. And I don't want to get too philosophical about it, but it just kind of bleeds down to its core essence. And I just think it's, really interesting with all the concerns around tariffs. But look at China, look at Hong Kong, look at Korea, look at Vietnam. These countries and their equity markets have done extraordinarily well. And they continue to do well. I mean, Japan is at a 35-year high. And that's more important because it's the first 35-year high it's seen in 35 years.
RENMAC Offscript originated as a weekly internal research meeting designed to summarize and discuss what happened in Washington, the markets, and the economic data over the past week. It was always intended to be and remains a free-flowing conversation with no discernible objective other than to extract the wisdom and opinion of our analysts and their expertise. This is a conversation among colleagues. Individual circumstances are unique and nuanced. Do not mistake these conversations for investment advice because it's not. Here we go.
All right. Welcome to RENMAC Offscript, where we openly discuss markets, economics, policy, history, and life. It is Friday, August 22nd, 2025. I'm Steve Duttenhofer.
I'm Jeff DeGraff. Man,
and I'm Steve Pavlik.
You ever done this before?
I got thrown off because Neil's not here. I don't know why.
Oh, yeah.
He's on vacation. Anybody know where he is?
He's in London.
Really?
Yeah.
I can't imagine that his personality goes well in London, but maybe I'm wrong.
Because it's so endearing here.
I'm sure he's. Love you, Neil. I'm sure he's a delight waiting in line for the Ferris wheel.
Yeah. This is why you don't skip the podcast, because if you do,
we'll make it free game.
We'll make fun of you.
Hey, do you like my T-shirt?
What's it? Oh yeah, for those people on YouTube, what's it say?
The Wuhan Institute of Virology. Our mailbag guy got it for me.
Thank you, Harry Chen. We'll bring that up later for you. Get us all one. We need some more hats. Maybe those are the hats we should give out as opposed to RENMAC hats.
There we go. The RENMAC hats are pretty hot for sure.
They are, and as you said last week, they're going to get even hotter this coming year.
Boom. So nice lead in. Yeah, that's it. That's a marketing hook for sure.
There we go.
So it's a quiet week in market. I'm gonna take over here. Sorry, it's a quiet week in markets, but it's a really great week in my household because, and I'm serious about this. I'm not kidding around. The consumer reports came out. Like it comes out every month or maybe every 6 weeks. I love consumer reports. The magazine, the hard version, it tells you like what's the best grill to buy, what's the best and I'm not kidding. My wife, she doesn't yell at me, but she laughs at me. After every issue, I probably spend like $100 to $150 buying the stupid gadgets that they're like, oh, like here's this. So there's like a little single issue cold brew, which, I've got like a big one I do, but I don't drink that much cold brew and I want it to be decaf. So like there's a single one. So I bought that. We'll see what happens. But what I really wanted to hit was there is actually a review of toilet paper. And I'm kind of thinking, most of the time it's pretty quantitative. And I'm like, how are they doing this, right? And so, I'm like, hey, Bob, how's it going in there? Well, pretty good, but the squares don't break off right. And it's a little linty for me. I'm like, how does this really work? But you'll be surprised to know that the best toilet paper is, quote unquote, great name, by the way, Who Gives a Crap? And it is 100% bamboo. And so the upside is this is the best one in Consumer Reports, little, PSA here. It's strong and lint free. I didn't know lint was a big issue. I don't want to get into it, but I guess it's a big issue in the testing. And it tears into neat squares. The texture is not as soft as most cotton rolls, but overall, the bamboo, the 100% bamboo is the best TP that's out there. Now, if you're a traditionalist, I get it, then it's Quilted Northern Ultra Plush at $1.66 per roll. Thick and cushy. this was also the strongest in our test. So just a little, what is usually a very quantitative, they do the cars, they do everything. I mean, it's actually a really great, service and magazine, but I was a little dumbfounded when I saw the toilet paper and just kind of wondering what really was the criteria.
Which is why I love the podcast. You just never know what conversation you're going to start with. What was the name of the?
It's a crap, right? Yeah, there we go.
What was the name of the magazine that used to be in the back of the airplane seats? When you'd fly and you'd see those things.
Was it Sky Mall?
Yeah, Sky Mall. Yeah.
And then when you had the phone, you could remember how you could like dial for free and use that. And oh man, like ancient stuff. All right, let's get into the meat.
Well, we were talking about Wuhan, although I don't want to maybe make this connection, but I will. Let's talk about Asia. You had a note out to clients today about or this week about Asia again. So let's start there and maybe work around to your thoughts on where we are in momentum and beta trade. Let's kick it off with the markets.
Well, yeah, look, I mean, I just think it's interesting. I mean, one of the things I like about what we do in our discipline is it's not narrative driven. It's not news driven. It's not confusing. It's just charts. And that seems, ridiculously simple and maybe overly simple, but it actually is really, really effective because it's the collective wisdom of the market. Kind of when you think about it, there's a certain kind of purity to it in essence. And I don't want to get too philosophical about it, but it just kind of bleeds down to its core essence. And I just think it's, really interesting with all the concerns around tariffs. And, my formal education is around, anti-tariffs and everything else. And I'm still in that camp for sure. I think this is more about leveling the playing field than it is about being punitive, I guess, to other trading partners. Just trying to get things level set. But that said, the doomsdayers out there, talking about Smoot-Hawley, and I think everybody kind of goes back to this Smoot-Hawley tariff in the 1930s, which exacerbated the recession. One thing there that Scott Bessent hit on a little bit, I don't think it's been pulled on enough in terms of a thread, is it's a lot different. The impact of tariffs are different whether you're a net debtor or you're a net creditor, right? And back in those days, we were a net creditor. So I think it's a completely different impact on these things, and people just kind of look at it and say, oh, well, that happened and therefore it's going to be really bad, and we're in a completely different state right now in terms of being a debtor nation. So maybe not, and I think that's what's being played out in the markets. But specifically on Asia, I think what's interesting, and this would apply to the frontier countries as well. So there's a frontier index, and the frontier index is essentially names that are not EM or emerging markets. They're the next step down, right? They're really the on the cusp. They'd be those markets that maybe toilet paper is a new thing for them, right? Like, so it's relatively relatively third or fourth world, if you will. Anyway, that said, those markets are doing extraordinarily well, which you would expect they would not be doing as well because they would be, seeing the impact of tariffs and what that means. And they've actually rallied really strongly and vigorously. Now that's globally, but specifically Asia, which seems to be the kind of focal point of the ire, if you will, of the Trump administration. And I know that we've cut a deal, or they've cut a deal with Japan. But look at China, look at Hong Kong, look at Korea, look at Vietnam. These countries and their equity markets have done extraordinarily well. And they continue to do well. I mean, Japan is at a 35-year high, and that's more important because it's the first 35-year high it's seen in 35 years. It's what we call a fresh high, right? So I got in the business in 1990, and the market in Japan, the topics made a peak in 1989, and it had not seen a higher level than 1989 until here most recently in this quarter, right? So it's for the first time, it's actually above the levels that it was in 1989. And we're seeing that, they're not at 35-year highs, but we're seeing improvements in China. We're seeing improvements in Hong Kong. And I just think that there's something, again, when you take a step back and say, okay, who am I going to listen to here? The quote unquote experts, or is the market telling us something? I think you have to give some real credibility to the markets and what they're saying. And again, I'm not a pro-tariff guy by any means, but whatever is happening, it seems to be working for the benefit of collectively the world, not just the U.S. It doesn't seem to be a zero-sum game, which is easy to kind of predict that that's what it's going to be, but it certainly seems to be more encompassing and good for the equity market. So we'll see. But I like what we're seeing out of Asia and the frontier markets for that matter.
Do you at a call this week with an investment committee? Do you favor what's happening in Asia or in Europe?
Asia for sure, because it's more broad. So Europe is okay, but when people talk about the breadth divergences, there's a lot of chirping around here in the U.S. about this is the Mag 7 leading and et cetera, et cetera. And I think it's really important to draw a distinction. And we talked about this maybe 2 or 3 weeks ago. There's the Mag 7 and some of the tech names are relative strength leaders, right? So you're always going to have relative strength leaders in any market. That's just the way it works. It's going to happen. Now, I know if you don't own them that you're going to underperform, and that's troublesome, but that doesn't mean you're losing money. What you worry about is when there's a very slim minority of names that are making money and everybody else is losing money, right? I own utilities, I own financials, I own whatever, and I'm actually losing money while everybody's making money in tech. That's a problem. This is just a relative game. I'm not making as much money maybe in utilities or financials or industrials or whatever, but I'm still making money, and that's important. That's not happening in Europe. If you look at discretionary names, if you look at some of the industrials outside of, say, aerospace and defense, you're really making money mostly in utilities and financials and aerospace and defense in Europe. So that's a little bit more troublesome than what we see in Asia, which is more broad-based. It's tech, it's industrials. I mean, there are laggards, there are losers, and there will be in any market, but it certainly looks more interesting and more holistic, if you will, as we look at those rallies.
Yeah, and a lot of times on those sector stuff, obviously we touch on those in our sector snapshots we do each week for our clients. We do 3 a week. So there's a lot of stuff that we drill down on, as you pointed out, whether it's relative or it's the individual names. So if you're interested in those, please reach out to us at renmac.com. We can certainly get you set up on a free trial there.
And what's interesting about the sectors, I think right now, probably as much as any time I've seen in my career, and that spans back to that 35 years, is the heterogeneous nature within the sectors, right? Like you can look, I mean, it kind of always happens in discretionary and industrials because they're just very diverse groups, right? You've got sort of employment services and waste management, and then you've got aerospace and defense and machinery, and they all act very differently at different parts of the cycle. So it's not so much there, but it's in everything, with maybe the exception of financials, where financials across the board look pretty good, maybe with the exception of some insurance names. But within all the sectors, I can point to very good charts and I can point to very bad charts. And, that's kind of a unique feature of this market that's been happening for a while now, but there definitely are winners and losers. While we don't have like really clear dominance of a sector in terms of performance, within the sectors, you've got very clear dominance of industry groups. And, that can be a little bit more challenging, but it's also a great opportunity for portfolio managers because you can differentiate, in terms of performance by owning good versus bad.
And you touched on it a little bit. That would, I would imagine, extend into semiconductors and technology in general, right?
Yeah, even within semiconductors, NVIDIA, Credo, look great. And then you've got ASML and, Qualcomm and others at Intel, which we can get to. It's a good segue into that, which don't look as good.
So actually, thank you, Jeff. That is a good.
That's what I'm here for.
So you want your seat back, I think. Steve, let's talk about Intel and the possibility of perhaps this being the new frontier in how we manage our industrial policy, and if there are other sectors or other companies that could be quote unquote Intel going forward.
Well, actually, I'll go back to where we began the conversation with Jeff. Sure, it goes back to COVID and post-pandemic. In all seriousness, this growing awareness of our supply chain vulnerabilities and trying to identify these strategic sectors. And I think this is important because it's something that has bipartisan support. So when you see some of the announcements that have been coming out recently, you see this 15%, tax, for lack of a better term, on export controls for semiconductors from NVIDIA, AMD, this reported 10% stake in Intel. We have the government taking a stake, golden share in Nippon Steel's acquisition of U.S. Steel. That's a strategic sector. The government taking a stake in MP Materials, rare earth processing. That's a strategic sector. If you're trying to identify what the strategic sectors are, the work's already been done for you. It's easy. It's the ones that the Trump administration is looking to impose Section 232 sectoral tariffs. And the idea is that these are strategically important sectors that we need to bolster domestic production, even if it's less economically efficient and our interest may be to do so. So we go back to Intel. This is something you can go back to at least to the CHIPS Act during the Biden era, where you have the government providing a lot of grants and subsidies to try to bolster domestic chip making. And the idea that you could make Intel, this big producer, rely less on TSMC, again, it sounds good in theory. And I think the Trump administration, what they're articulating, sounds good in the sense that, okay, the U.S. taxpayer has given this money here. Why don't we share in the potential upside? I guess the risk moving forward is a future administration. They're not only going to say we've given you our money, now we're going to give you our 2 cents. I think that's part of the fear. And then to your point, is this sort of spread out to other sectors, presumably, again, once identified in the sectoral 232 tariffs. So I think that's something to worry about. Other tech chip firms have taken money from the CHIPS Act. We had the Wall Street Journal article this morning, Friday, August 22nd, suggesting that the Trump administration doesn't want to pursue a similar structure in those, provided that they continue to invest in the U.S. Again, how durable is that from this administration to the next? Again, I think that's sort of the risk.
It sounds like creeping socialism to me.
I think somebody was Greg Ip at the Wall Street Journal called it state capitalism, and that was in regards to the export control. And you're right, that's essentially where we're going now. But I guess the risk is if we don't bolster these strategic sectors, do we become too dependent on China? There's a risk there too, and that's definitely something that policymakers are wrestling with. And right now, it's bipartisan support for more government intervention. And again, that comes with its own risk. I don't know that the government has a really good track record in terms of getting involved with companies and making them more successful. But that's just me.
But on the flip side, to take the other side of it is, look, the government, the taxpayers giving these companies money, and we're not just going to give you a blank check anymore. We're going to give you money, and we want the upside. Like I think that piece of it can resonate with people on the right side of the aisle.
100%.
That's what they're essentially trying to do, and that's provided that there is upside. And again, that provides the assumption is that we're just going to be like an ordinary shareholder, and not try to include these strings attached with it. I guess that's sort of the fear. I guess is that really sustainable? Does another administration come in and start to place a greater priority on political objectives than returning money to shareholders? And I think that's sort of the risk. I mean, even back with the CHIPS Act, once the bill passed, when the Biden administration wrote the implementations, you had to include a number of social policies to be eligible for that. So again, it's just how durable is this?
I mean, you've got a couple real life examples. I mean, at one extreme, you've got Fannie and Freddie, right, which the government owns officially. They're looking to privatize again, so that's interesting. I get the backstop implications there. But you also have, I think, the Tesla template's a good one, right, where you took billions of dollars in loans, paid them back early. A nod to Elon for sure. I mean, there's nothing he did that was wrong with that, right? But the government made, I mean, I don't want to call it bad investment, but it wasn't as lucrative as it could have been, right? Like, here's money and we want some warrants, or here's money and we want, you should be able to participate in the upside. I mean, that's kind of the bottom line. But the risk, and I get it, like this first step is a smart one from a business standpoint. The risk is from a government standpoint, does the left take it and run with it and make it more? I mean, socialism is about controlling the means of production, right? I mean, that's what this could lead to, right? That's what's dangerous about it. So in some way, to have the upside without the influence, I think is important. And, you'd have to do that very, very carefully. But I am for it if you could ring fence it and firewall it, but I'm against it because I don't think they can.
You mentioned Musk and Tesla and how they sort of approach this. I know this past week, or I guess, he basically moved off this idea that he was going to have a third party. And it's hard, it's a hypothetical, and I know you don't want to answer hypotheticals, but where would they come down on this? Where would a third party, where would Musk come down on this sort of industrial policy? Would he be pro it or against it?
It's interesting because he has these libertarian instincts,
Yeah.
yet his own business models depend very much on relying on the government. So that's why I'm giving you a long-winded answer for saying I'm not sure. Given his past business experience, I think if it's structured in a way that Jeff's sort of talking about, where we can take your money, but we don't want your 2 cents, he's probably in favor of that. I think what may be encouraging for owners of Tesla stock is the fact that he's going to focus more on the company rather than getting involved in politics. And honestly, money aside, it's just very difficult to really make a difference in terms of a third party. Practically speaking, just from a congressional standpoint, in order to have a seat on congressional committees, you have to be a member of one of the two parties. So again, that's practically why we don't really have true independence in the Congress.
Right.
If that wasn't so long, that's a great title. We'll take your money, but we don't want your 2 cents. I know you didn't mean that on purpose, but that was brilliant. Brilliant.
Well, I'll throw that into chat, see if I get somehow shorter.
There you go.
Speaking of independence, or what we thought was independence around the Fed, Lisa Cook. Cooked? What's going on there? Can you give people who don't know what happened, sort of the backstory, and then what the go forward is here?
Well, it's interesting you said independence. I mean, critics of the administration are questioning, was another example of Trump, what they say, interfering with the independence. Others are pointing out to alleged illegal activity where, apparently, based on what was reported and put out, that she falsified documents to receive more favorable loan terms by claiming 2 primary residencies. If this sounds familiar, it should, because similar allegations have been made against 2 other Democratic opponents of President Trump, in terms of Adam Schiff, the Democratic senator from California, as well as New York Attorney General Letitia James. It's also interesting that none of the 3 have denied the allegations. Again, they're just allegations, not trying to get in trouble, but I think that's an interesting story. And with respect to Cook, it's not just her. You had Adriana Kugler step down as a governor recently after reports surfaced that her husband engaged in illegal, or at least unethical, trades that violated the Fed's code of conduct. So why is this important? Concerned about Trump's ability to fill vacancies to the board. From a monetary perspective, that's more in Neil's lane, but maybe take it more in a direction where he wants to go. I look at it more from a regulatory standpoint. Of the 7 members, if Trump can get 4 on his side, that's going to be a very favorable regulatory environment for the banks. And those decisions are clearly more partisan than the monetary decisions. I don't think anybody would dispute that.
Look, I think more important is that she was a professor at Michigan State, but she bought a house in Ann Arbor, Michigan. Like that alone should be enough to bring her up on something.
I mean, that just questions her judgment, right? No doubt about it.
Well, I mean, Connor Stallions was, there too. So maybe there's something in the water there in Ann Arbor. I'm not entirely sure.
Yeah, there's something in the water, all right.
Well, listen, it was a $30 million fine, perhaps, for Michigan. So
I think right, yeah. I saw something about that. I think I was going to screenshot it to you, but I got distracted. Shocker. I mean, anybody who's filled out a mortgage application, that little box, right? And you do it because you do get more favorable terms if it's a primary residence, because obviously it's not an investment property. You're more tied to it. You've got a bigger commitment, if you will, at least I think emotionally, to your primary residence than not. I think this just goes back to, and it's just, look, if you're going to sling mud, man, you better be sure that your house is in order. Like, people in glass houses shouldn't throw stones. And I mean, if I was going to be a prosecutor and somebody said, "Hey, I need you to go after, Steve Duttenhofer," I'm like, yeah, I might not be the right guy. Like, I might have some of the same problems that Steve has. So how about you find, a different choir boy? I mean, it's so short-sighted. Like, you better have your shit together if you're going to play in this box.
I would just take it a little step further, maybe transition to somewhere else where, I guess I'll go back to my Catholic school upbringing, treat others the way you want to be treated. And when you start setting and playing by one set of rules, don't be surprised when it's played by the other side against you. And now
Who said
Trump,
that? Judas? Is that Judas? Who said
yeah,
that?
it's somewhere in the back. I don't know, but it's
Set it over the dinner table.
Trump has now gone from the hunted to the hunter based on his elevation. So for him to apply lawfare standards like that, and then when you get into the congressional side, now you have Republicans looking to redistrict, and you have Democrats that have done it in the past that are upset about it. And like, look, the standard is the standard. I know that's something that they say in Pittsburgh with respect to the Steelers, but if that's the way it's going to be applied, don't be surprised. What you're using now is going to be used against you, and that's true for both sides.
Harry Reid and the filibuster. Here we go.
Right.
Yep.
Hey, Paz, is that a Virginia T-shirt or shirt?
Darden, yeah.
There you go. Just dropped my daughter off down at the University of Virginia. Go Hoos! Let's go. Great looking place, by the way. Crazy. All right, it's mailbag time. Harry, bring us out. What do you got for us today?
Good morning. Today we have the question come from Harris Rubin Roit. His question is, what's the possibility of stagflation, recession in next 12 months? Thank you.
The probability. So we don't have Neil here, so I'll fight this one through. So what's the probability of stagflation and or recession in the next 12 months? I think the question really ends up being, what's your definition of stagflation? And certainly, I would kind of think of it as inflation higher than GDP, running in those terms, so that you have negative real growth, and we're not there. So I think that's important. If you look at our market cycle clock, which clients are familiar with, where we actually juxtapose the relationship between inflation and growth, and it's pretty revealing, just because it's a nice, simple way to think about things. But in terms of the economy, what that means for the equity markets, and we have been in this zone that's been right teetering on that kind of stagflationary idea, elevated inflation and lower growth. So that's kind of the environment that we're in. I wouldn't call it a hard stagflation, but certainly kind of a muddled environment, if you will. The good news is those indications are coming down in terms of the inflation input, and part of that's due to energy prices, which are huge. And I think that was one of the reasons why Secretary Bessent and the administration were focused on energy, because it does pass through to so many different things, and you get such a kind of a wide benefit focusing on one area that ends up being important. So a lot of what we've seen from the inflation side has been a lot of the noise around tariffs, and not necessarily the tariff impact per se, but people bracing themselves for it and front loading and doing things that they might not otherwise do in the normal course of business. So we had seen kind of this backup in our inflation indications, which were pretty consistent. I mean, we've got the data that takes us back to the late 1940s, so it's it's a robust data set. And the only time that you really see it kind of swimming against the tide like that is when you get into a supply shock, right? And so if you think about kind of Saddam Hussein and invading Kuwait and what happened to energy, a lot of those supply shocks are energy related. In this case, it was tariff related, right? And so we did see that back up. The good news is that's starting to relieve itself. We're starting to see it come down and push downward. And so hopefully there's a trajectory there that continues, which is good news. On the recession side, I think the one thing that economists have not been strong on here, calling for recession or just kind of missing what's going on, is what's been happening in the credit markets. And we are big users of the credit markets. That's not a recency bias. It's been 25 of the 35 years of my career, I've been focused on credit and what happens there, because it's such a good window into the soul of the economy. And when we look at the credit markets, and I don't think there's a lot of value in credit right now in terms of, say, corporate credit, but those spreads are incredibly tight. And so you'd be very hard pressed to have a recession when these spreads are as tight as they are. In other words, credit spreads will reflect the expectations of aggregate demand, because if aggregate demand is contracting, then your ability to pay your bills or your interest payments goes down, right? It's harder to make those payments. Your margins get compressed, and so that gets reflected in the credit markets, and you're just not seeing that. And so I think if I had to handicap either one of those, I'd say stagflation, that trajectory that we see, does not manifest itself or follow through. I think that would be a risk, but I think the risk of recession here, at least vis-a-vis the credit markets is relatively low. So hope that answered your question, and we'll get a hat out to you.
Absolutely. We got a nice RENMAC trucker hat out to you. Like I said before, there's going to be some new versions of this coming out soon. So get them while they're hot, so we don't miss the trucker hats. What are we looking for, Jeff, as we get into next week?
I didn't do it daily today, and it wasn't for laziness or apathy on my part, which would be a good guess, but it wasn't the case. It's been an amazingly quiet week, and we did see some improvement in small cap. We've seen some continued contraction in beta, and again, I think there's a common misconception that beta is momentum. That's not the case. In fact, I think it was Wednesday, we had beta was getting slaughtered, and momentum was actually marginally higher, right? So there is a distinction there, and I think that's really important for people to recognize. We are long momentum, and we are short beta. That's the bottom line. We'll continue to look for more of that trade to come out. That high beta versus low beta trade to come out. We went from the 100th percentile about a month ago to now the 93rd percentile, which doesn't seem like it's much of a move, and I would agree with that. But if you look at it on the percentage terms, if you were long beta, high beta, and short low beta, you had a 36% market neutral return as of the middle of July. And as of this week, going from that 100% down to this 93rd percent, that had contracted to only 10%. So that drawdown is real, even though that percent, seems like it's trivial. It's actually real. So I think that's important. I think it will continue next week. While it's a slow week, obviously, going into the Labor Day holiday, NVIDIA reports. And so, interestingly enough, in our work, and this is a very, very hard game. So I don't, anyone who knows, it's kind of like trying to play baseball, through FanDuel. It's tough. That's why they play 161 games. But we have NVIDIA as a slight miss, or I should say disappointment, right? So that'll be interesting to see how that plays out, because I don't know if the market's ready for that. CrowdStrike also reports. We actually have that one as more favorable. So we'll see how that ends up playing. But that's what
apparently your dog didn't like that.
Yeah, dogs. You know what I have? So that we'll see if he barks again. I got this thing. This is like it is a
Sky Mall?
No, it's actually off Amazon. It's not very expensive, but it's a ultrasound, and so you can't hear it. Like, can you hear that? You can't hear it, right? But my dogs are freaking out right now because it has some pitch. I'd love to know what the pitch is, but they instantly stop whatever they're doing. They're like, dang.
I saw that advertised on some social media site. I don't know what it was, but they were doing it for the neighbors' dogs.
Oh, right. We were in apartment buildings. That's how my wife bought it. She's like, she saw that, and yeah, I guess it worked. It works on our dogs.
There you go. Works on any dog you want.
We actually have two. I've got one up here. I'm on the third floor of our house here. So when they're barking downstairs, I can just point it at they just stop. And then she's got one down there too when they go bananas for whatever reason.
I think of a lot of other people we could use that for. Steve Pavlik, what do you got this week?
Well, I'm just glad to hear that that's what it is and not a taser. That's what I thought it was. Probably equally as effective. This week, I'm going on vacation. So,
where are you going?
Going to South Carolina. I'm driving my 4-year-old and 2-year-old sons and my wife. So don't envy my long drive. But for others, the things to watch this week, I think, Wednesday, we have this tariff rate. India is supposed to increase from 25% to 50% because of their purchase of Russian energy. We'll see whether or not that comes to pass. We have U.S. negotiators going down there Monday. So that's something to keep an eye on. And then Friday, also on the tariff front, that's when we're going to have the so-called de minimis loophole that removes exemptions for imports valued under $800. That's going to go away. That's been telegraphed for a while. But that's something to watch as well. And then we might have some other positive developments. We have reports that China is considering purchasing Boeing aircraft to try to reach some sort of off-ramp there as those talks progress. And President Trump speaking with Canadian Prime Minister Mark Carney. And I think talking gets better than not talking. So perhaps there's reason for optimism on that front as well.
All right. Well, let's end it there. I'll remind everybody to follow us on X, subscribe to our YouTube channel, Make sure you like us, keep those comments coming. We love them. But we'll be back next week for more of our thoughts when we'll be 1 week older and 1 week wiser. I'm Steve Duttenhofer.
I'm Jeff DeGraff.
And I'm Steve Pavlik.
Thanks, everybody. See you next week.